Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that might sound like corporate housekeeping, but it actually tells us about a shift in power. Think of it like this. Imagine a company with two types of owners, one with more control than the other. What happens when the controlling owners give up their extra power? Let's find out. We are looking at a filing from Grove Collaborative Holdings, a company you might know for its focus on natural and sustainable home and personal care products. This isn't your typical earnings report though, it's an 8K, which companies file to announce big changes that investors should know about. In this case, it's about some stock changes. The big news here is the retirement of all shares of the company's Class B common stock. You might be asking yourself, what does that mean? Well, companies sometimes have different classes of stock. Class B stock often comes with special voting rights, meaning each share gets more votes than a regular Class A share. This gives the people who hold Class B stock more control over the company, but in this case, Grove Collaborative is getting rid of all its Class B stock. Before they could retire those Class B shares, they had to be converted. Converted means changed, in this case from Class B to Class A. The conversion happened earlier in February. So basically those superpowered Class B shares became regular Class A shares. After that happened, the company filed a document to officially get rid of the Class B shares. So why is this important? Well, getting rid of the Class B shares simplifies the company's stock structure. It means everyone holding common stock now has the same voting rights. This can make the company more attractive to some investors because it creates a more level playing field. The report also mentions that this change reduces the total number of shares the company is allowed to have. They can now have 600 million shares of Class A common stock, and Tenor had filed that often has different rights and privileges than common stock, and 100 million shares of preferred stock. Preferred stock is another type of stock that often has different rights and privileges than common stock. The official document for this change, called the Certificate of Retirement, is included as an exhibit. If you were to look at it, it would show the legal details of how the Class B shares were retired. There is also a file in a special format called Inline XBRL. This is basically a way to make the report data easier for computers to read and analyze. Now, what does all this mean for Grove Collaborative? It suggests a shift towards a more traditional corporate governance structure, which is the way a company is run. By getting rid of the Class B shares, they are moving away from a structure where a small group of people had a lot of control. So let's step back and think about Grove Collaborative. They are in the business of selling sustainable home and personal care products. They have to compete with big companies that have a lot of money and resources. This move to simplify their stock structure could make them more appealing to investors, which could help them raise money to grow their business and compete more effectively. However, it is important to remember that changing the stock structure doesn't automatically fix every problem. The company still needs to execute its business strategy well. They need to continue to attract customers, develop innovative products, and manage their costs effectively. In conclusion, Grove Collaborative's decision to retire its Class B shares is a significant step. It simplifies their stock structure and potentially makes them more attractive to investors. This could provide them with the resources they need to grow and compete in the market. But as always, the real test will be whether they can execute their business strategy effectively and deliver results. Thanks for watching. If you found this video helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings.